Hello, everybody. This is Claudio for Growth.Lat, and today we'll be giving you 5 ways the fintech industry can support farming. Quick little introduction here. When most customers and investors think of fintech, which is short for financial technology, their minds are immediately drawn to niche industries like cryptocurrency development, meeting the challenges of modern healthcare systems. What few people consider is how fintech may be able to solve problems in other areas, like, for example, today's agricultural problems. We will also be using the example of India a lot because, as everybody knows, they have been undergoing some very big farmer strikes, and the main reason for that is economical. Okay, so here are some ways that the fintech industry can support farming. Number one, easy loans for farmers. Borrowing money is a common part of any farming operation in many nations, and India is, of course, no exception. Unfortunately, the situation was less than favorable until now because farmers were forced to go through middlemen, and they had to jump through various hoops in order to acquire the funding they needed to operate. That's not the case nowadays anymore because, mostly thanks to the efforts of the fintech sector, they are now able to make direct loans, and these are more available to everyone in general. The next way to support farming would be through direct connections. On the note of the example before, farmers now have better opportunities for establishing direct connections with lenders and other institutions that might be important in their operations, as opposed to having to rely on middlemen as they did until now. This change alone can potentially have a huge impact on the way things work locally, and hopefully it's a trend that is going to stabilize even further. Number three, ongoing payment models. Instead of having to make large upfront payments for the equipment, the tools, farmers can now make use of various ongoing payment programs that can introduce a lot of stability in their operations compared to the way it was done before. By only paying for what they really need, for what they are truly using, many people now have the ability to organize their finances in a much more efficient manner, skipping some of the problems that are commonly encountered when you're dealing with a traditional model. Number four, affordable financial services. Financial inclusion in the farming sector has traditionally been low in India and in the surrounding region, but that's no longer the case as various financial services are becoming more and more accessible to farmers in the area. Some new companies arriving to the market are even focusing on this aspect specifically, bringing an even greater variety of financial tools and utilities to this corner of the market. And finally, better insurance. Another problem that's been prevalent for quite a while, but is now starting to get addressed, is the availability of proper crop insurance plans for farmers. This is finally starting to shape up in a more serious manner. Protecting your crops against the worst is no longer such a challenging ordeal, although there are still a lot that can be done to improve the situation. The important thing is things are moving forward, they are moving in the right direction, and it's mostly happening thanks to the fintech sector. Okay, guys, thank you for watching. This was Claudio for Growth.Lat. See you again next time. Bye-bye.